Good morning, everyone. Happy Monday. So we talked on Friday, about this potential gap up, and so here it is. A monster reversal to the upside over a short period of time, right up into prior pivot high, swing high there on the futures, and it gaps up. And so it hasn't fallen back very much, actually holding up relatively well. So the question was, the gap and go here keeps going, gap and crap. The gap and crap seems more likely since it's up multiple days in a row, straight up into an area of resistance. But patterns like this do not suggest some huge decline. So from a day trading point of view, there could be an opportunity here for some profit taking. And, just makes common sense that there would be sellers after a gap up, after, a giant move from this low to high into resistance. That being said, with all of this news that is coming out, Mexico, and who knows, and, the shoe could drop in the other way with China coming out with something else. That seems to be on the back burner for now. Its happy days are back again, and it can turn back around pretty quick. But we'll see. We've got our support reference points. We set alerts, and if things start coming in, we start paying attention to what other markets are doing, and and so on, internals and what have you. So right now, it just pulled back. You can see on the hourly chart, we use multiple time frames to get some detailed views on the price action. So prices came down into the unfilled gap area. Actually didn't even come down to the close, which is even more bullish. It just kissed the top of this area there, made a pivot, which now created new support to trade off of, and buyers stepped up on it. And now it's pushed up a little bit. And this price action at the moment suggests gap and go if it can get through the high of the day. How high can it go? Well, I wouldn't think it could go very high after a move like this, but that's just logical thinking, and logical thinking doesn't always work in the markets. So we'll just see what happens if it can take out that high, because at this point we've got a reference point at a high and we've got a reference point at a low, and as long as it's in this area right here, you're better off to stand aside and wait to see which way it could break. And even if it breaks to the downside, which again seems more logical, that would continue to move down. If it was to break to the upside, maybe it's better to wait 5 minutes to just see if it's a fake out move or such. So it's the beginning of the week. It's a news-driven market. The news drove the market higher. And last week, we just trade off of historical patterns, and based on those patterns that suggests what's going to happen in the future, we trade accordingly. And but we'll see how this thing plays out. So NASDAQ underperformed, and we could easily see that just by the fact that they're not up to the 50 MA. They're not close to the swing high there. They're well underneath it, but a similar 4-day move to the upside, sizable move, and now a gap up, and the same hourly pattern. So these weeklies have created this very, very important line in the sand, because when you get a pullback on a higher time frame with a reversal the size of this one, the obvious message here is buyers are taking control in a huge way. So we always stay objective. We always consider the possibility other than what the obvious is, meaning, well, what if this fails? Well, it's possible. So you set an alert down there, even if you're not watching it. And if this was to fail in this week, that opens up the door to a huge move to the downside. So we monitor our reference points of support and resistance. We look at multiple time frame trends. We see what they're suggesting, and then we see what actually unfolds. So same message on the hourly chart. It created support. Does it break below here? what would open up the door to some kind of even a minor retracement based on the daily, or can it get above there and attack toward the 50 MA up in there? And the Dow, actually, you can see the difference here above the 50 MA, above the swing high, showing relative strength, bigger move. But, just being totally fair, the NASDAQ had a bigger move to the upside, so it had more room to fall, and it did. So now having a bigger fall to the downside, it has more ground to make up to get back up to the same high as the other markets, which didn't fall as much and didn't move up as much as it did. So same story, gap up, it had that pop, same pattern here, bigger weekly bar, just overall in a sideways trading range. Put it in perspective of the big picture. And so with that big bar, as I said, the message is obvious. It's buyers are in control, and they're taking control because they think prices are going to go higher. Now let's see what they do if they can get out of this trading range. New all-time highs coming? Yeah, we'll see. This pattern is suggestive that we're likely to see some choppy action, because after big bars, right? So here's a little bit of a back up a second here, just to reinforce what we teach in our courses. Right? Big wide range bars or multiple bars in a smaller time frame, which create a price void. What's a price void? There's no reference point of support underneath. Now, as we take X-rays into a smaller time frame, we get little price reference points, but because this is what we call a power uptrend, there really isn't much support here. Right? So if buyers don't step up, even if it pulls back, if buyers don't step up to hold this thing up in this area, even if it pulls back and chops around for a few days, it has a tendency to fall under its own weight, so to speak, because it's supposed to create support, meaning it's supposed to chop around. Buyers are supposed to be aggressive on a pullback. And if they don't, well, that's what creates failure patterns. So this is all part of what we call the factory work of monitoring the historical patterns one way, whether it goes one way or the other, and then update accordingly. So we know what we're dealing with here. Now we're going to see gap and crap. How much does it crap? Or, as I already mentioned, gap and go if it can take out the high. Bonds pulling in as they should, but really not doing any real damage here. An expected stall in the momentum on the way up after that pullback into minor support and strong run up, wide range bar. So now it's just stalled here. And this is something you need to keep an eye on, because as much as the markets are showing strength, and while they might consolidate, right, or if they should go higher, whatever, depending on which way these bonds go, right, are they in alignment? Meaning, if this was to start pulling back, that's going to help support equities going higher. On the other hand, if this was to break out above these highs and keep going, that's going to put, a cap on equities, and we'll see how much that might push it down. Oil, right, we came off of the low, right, which we were expecting when it came down to this prior support here. Got a bottoming tail on the weekly, somewhat similar pattern on the hourly there, just chopping around. And so it would be beneficial for oil to move up if equities are going to be stable and possibly move higher over the near term. And so right now, they're just stalled here. If they start to pull back and you see the bond market going up, well, if you're bullish on the market here, you better draw that in a little bit, because odds are, based on what we've seen, the whole worry is, okay, the economy is going to slow down, the tariff thing, blah, blah, blah. So oil tanks, bonds go up, interest rates go down, equities are under pressure. So it just makes sense to keep an eye on these intermarket relationships, even intraday. Gold pulling back makes sense, up against resistance, and they run up there, and sellers come in, and now Fed's going to lower interest rates. That's inflationary, blah, blah, blah. Okay, it's at resistance. It's pulling in. let's see where buyers want to show up on this as it begins to pull back. And so you want to take a look at just taking a look at the ETFs. Similar story. They don't move exactly with the futures, but somewhat similar story. Spiders pushing up to that swing high there, gapping up, pushing up there. So possible, is it going to gap and crap? We'll have to trade under this low here, which would get things pulling in a bit. But even if it does, big weekly bar like that, buyers should be stepping up, relatively soon to support this move higher. And as I said, otherwise it has the possibility to fall all the way back. And the thing with this is, this has never suggested it's going to fall all the way back, but because of the way it went up, it opens up the door to that possibility if the buyers get shy here and they don't step up aggressively like they're supposed to. And what else? So across the board, we've got all these weekly reversals to one degree or another, almost no matter where we look. Semiconductors, nice weekly reversal. They're in downtrends, but still like they could go higher. Consumer discretionary was pulling back, popping up. Consumer staples, I think, was one of the most wildest reactions over the last couple of weeks. Then it was showing relative strength here as things started to decline in May. Looked like it could possibly go higher if it could survive the correction. And then as the correction got a little more aggressive, let's just say, it fell and then it just went right back up again. So a whipsaw there where, sellers, buyers, I guess, just bailed out on it and then just came right back in again. So really crazy kind of price action there to break down under these lows and then go right back up again. But that's the kind of market that we are dealing with. Financials, similar patterns across the board, reversals there. Solars look pretty darn good as far as something that really was pretty much unaffected. It just chopped, it went down during the correction in May, not as much, came right back up again and then broke out last week. So a much more constructive pattern as something that has the potential to move higher. And internet, the FANGs have been lagging. So we'll see if that rhetoric as far as breaking them up continues and what they do. And aerospace is another sector that looks pretty darn good if you want to go take a peek in there. And other than that, I'll turn it over to Dan to review opens and some of these stocks. There's a lot of green here this morning, so buyers jumping on board. Up. Huge. I don't know any news on that, but wow.
Yeah, it was a buyout. CRM bottom.
Okay.
So CRM is down, which is the normal reaction. But UTX, they're both up. So UTX and RTN has a little merger. I don't see any trades in either one yet. All right, let's do opens first. Netflix, we did a put spread for, so we only have 3 open trades in the weekly. We're pretty light, but if you saw the video, we set a record yesterday on last week on both, quantity, 19 for 20. We were very, very active, and we trimmed into strength in addition to trimming into Friday option expiration. But we entered a new one for Netflix for next week. It's gapping up, holding very well. Looks good. AMD, we have a put spread. We also have a covered call in the swing letter. It has a nice gap up. We're capping our gains on the covered call. So I'll keep an eye on that to take half profits. Lift was our only problem child, a deep retracement. I tightened the stop, it held it into Friday, even though it's a bearish close. So let's just go into intelligent hope mode here and see if this can hold and just grind higher. Now the swing letter, we have a bunch of trades open. Looks like a dozen of them or so. But we've been selling in strength. So EXR, we're long stock. Intel, we have a put spread. AMD, I mentioned. KMI, we're long stock as a core. RSG, long stock, we're in trail mode. DHR, long stock, trail mode. AON, long stock, trail mode. SUI, same. Beautiful 1, 2, 3 breakout. We're actually long stock in here too on the lift. Bravo Romeo, long stock in trail mode. Golf Hotel, covered call, looks great. GWR, covered call, trail mode, looks great. And finally, SPWR, core trade. This is a solar, so it's part of that TAM, which looks great. And that's gapping up today. Now let's look at a bunch of gappers here. PSN, McGraw just sent this to me. McGraw, I like it, a gap breakout. So that looks great. It trades very whippy, but it's an IPO, it's in an uptrend. You got rising 2050, you got a bullish weekly, and it's a gap breakout. So that's tier 1, I like it. ADI 105, it's a little big, but let's watch that for a put spread. NMIH, put spread, let's watch. CZZ, had earnings, but I don't see what it's doing. Fungu U, 3340, a bullish gap. Looks like it's an ADR. But I like the weekly reversal, bottoming tail, put spread candidate. Twilio, we do not buy breakouts when they run from the bottom of the range, but it's still bullish all time frames. So that one you definitely need a pullback. Zulu Sierra kind of made a higher low right here, gapping up, put spread candidate. KHC, this poor thing has just gotten destroyed. Gapping up here to 30 bucks. Let's see if we can do a Friday put spread on that. Stone, bottoming pattern, 2770. Let's 30-minute high put spread. TLT, I mentioned, well, I was looking for an M top, but now it's gapping down. Let's watch that for a call spread. Look at this new IPO. I missed that one on Friday, but gapping up $4. McGraw, what do they do? I didn't even look. Let me put them in this other screen. RVLV. Goldman Sachs, I have as a put spread candidate. AYX up $5 to 100. Needs to pull back. Disney, the journal said their new movie underperformed expectations, but no pattern. IIPR is a pot ETF. There's a lot of pot stocks moving this morning, so we'll have to scan again. Another bottoming pattern, 158, but it has a little retest here and a price void. So Baba's a put spread watch. Shiloh, I think had earnings, but this is a nice 1, 2, 3, 4 with a price void. I don't like the way it trades intraday and it's light volume, 61,000. But it's a downtrend, but that's a beautiful 1, 2, 3 and a downtrend. You had 3 days of consolidation where it's holding the upper 50%. Remember, we did our Lima Kilo like that. We did a 1, 2, 3 at the low. Oh, Lima Kilo. Well, actually, I put this one in the letter as a put spread. And it's holding very well here pre-market, up nicely. So that, I'm going to put that right here. Lima Kilo. So bottoming patterns, lagging the market, but it's gapping up. So put spread candidate. Hey, Jeff, good morning. And if you can fix your drop down. Tilray's been a mess. It's just ugly, but there's some action here. I read in the paper they entered some agreement about the lockup, you know, with the predominant owner. CGC is up. S-Fly, gap breakout, 52-week change. Hey, McGraw, this was the one I said I like the monthly. Here's our gap breakout. I like it. Let me put that here. McGraw, this looks like a core trade to me on the monthly. It might go up to 70 bucks. Who knows? Once, that sounds like a bio, 97. It's a nasty gap. UTX we mentioned is in the merger. CRM is the one buying data. 154, it's a bearish gap. Maybe this sets up as a condor. Let's keep an eye on it. Cron, another pot stock. I posted this one Friday as a put spread. To got up this pot, APA. Oh, these were mentioned in Barron's actually. That's why I have them here. Some dude. Oh, yeah, some guy in Barron's article said he liked APHA and Tagadev. And on his pan list, which is bearish, is this. So my immediate thought, we're not in it yet, but like I just said, I have a bullish put spread. My immediate thought was, if it gaps up on that negative story, then that's actually good news. And that's exactly what it's doing. DD, I like this as a put spread. If it can get out of at least over Thursday's high, put spread under Thursday's low. 5 is very messy, but I like the bottoming tail volume at major support. That was a put spread, but there was no juice. JPM had a cover story. Barron's bullishness. Look, it gapped right to those highs and it's coming in. That's a put spread watch. Some of these steel getting beat up. X, you know, when these things bounce and then just go sideways like this, and you get a price void, they look higher. NUE is, I like NUE better because it has a better price void. So that's on my list. FitB is a short watch. WDC is a short watch, but I didn't make it official because it's just so extended. Duke looks lower. WBA bottoming pattern. I like the 2-bar reversal here at the low. So that's a put spread candidate. SWKS, it's lagging. It's a bottoming pattern again. I kind of need a something something, but you got a minor bear sandwich. Qualcomm put spread, we'll watch. Intel, we're in. Pan W. Pan W looks lower, even though it's gapping up $2. This one's posted already, big old reverse head and shoulders, but it has to take out Friday's high. S-Wave, I put it as a long over this little pivot right there. NVIDIA, I like a put spread. SWM, another pot stock. SYF, on the bearish list. STX is a bear call spread under Friday's low. TWOW is a short under Friday's low. ABC on the long list, newer. These are all leftovers. It's bearish. It's on all this support, but look at the big old M top on the monthly. PayPal put spread watch. GLD we have as a call spread. Climactic sell setup. S-Fly I have down below, but I like S-Fly. Look at this crazy meat stock. had that crazy, crazy move into Friday's close, and now it's at all-time highs. All right, so I'm done with my list. I know Robert sent me a list. Let me start going through those. But let me, I gotta check Lima Kilo. Pre-market, it's the ETFs are holding very well. Oh yeah, Lima Kilo, I didn't post in the open trade spreadsheet, so I'm doing it right now. Oh yeah, never mind. So we have 4 new trade ideas in the weekly. It was harder to find trade setups. Amazon perking, Netflix perking. I'm going to be in the mode of tightening stops. AON is nice. Debbie, very nice. You know what I'm going to say? Just move stops, 30-minute lows on all longs, and then I'll go back and individually adjust things.